I think a fairly conservative budget. They're going to be very sensitive to the idea that anything that's sort of revolutionary or perceived to be unfair is not going to get through the Senate. So I think what you're going to get is a combination of some tightening up of what you might call middle class welfare, probably some issues in terms of tax where small business is probably going to get a tax cut, and they're also going to have to talk about issues associated with how do you help small business that's not incorporated. So there you're probably going to be talking about depreciation allowances. From what we know, they're going to be looking at Google taxes, but they're sort of saying, well, we don't need to introduce that. We can sort of get around that sort of problem using the existing law more harshly, if you like, and I think that's what they're going to do. So it's going to be sort of things that will help and people will be seen as fair and not really anything that's too revolutionary. I think the short answer is not much, and the reason for that is I think a lot of the main messages and policy changes are going to be signalled well and truly. And so unless you get a surprise, then I think the Australian dollar's sort of going to be pretty neutral. I think one of the objectives of the government would probably be that they don't cause shocks, either in equity markets or currency markets or interest rate markets. You've seen a little bit of an uptick in confidence, but really not much better than where it was before the RBA started to cut rates. What we've seen in the survey is better actual outcomes. So particularly what you've seen is improvements in essentially the consumer buying services. So the consumer has money, and if they feel that they need something like get your kids educated, pay your utility bills, etc., they'll do that. So that's been improving. We're seeing a lot of improvement in construction. So that's like building apartments. And you've seen house price increases in Sydney and Melbourne, so Victoria and New South Wales have been doing pretty well. So overall, I think the economy's going to be around 3%, unemployment around 6 and a bit, and what the government's going to try and do is just say, well, let's gradually set in place some mechanisms that aren't really new, but tightening up existing rules, get them through the Senate, and then move on. So you basically run deficits for a long time, but I suspect what they'll say is each year the deficit's going to be smaller. And so at some stage in the medium term, you're on a path to recovery. I think it's probably going to help a bit, but small business is, the smaller you go, the tougher the conditions that small businesses is basically reporting. If you look at credit demand for the less than $100,000 loans, they're actually still negative. It's really only at the top end of town that you're starting to see some sort of issues. So in terms of small business, yes, it's probably going to help a bit, particularly if you can get accelerated depreciation, but it's still pretty tough out there, and you've got to be able to convince small business that the economy's not going to turn around and clobber them. I think they'll probably say not a lot. Probably it'll be a bit harder to get benefits out of the government. You'll probably have to pay a little bit more tax, but they'll do it within the existing structure. Hopefully it sort of doesn't hurt the economy, and hopefully it improves confidence a little bit. And if they get through that, I think that's not a bad outcome.